But with a rally like this for small caps, inevitably comes talk of froth, and we have to note that when you look at momentum indicators, they are looking overbought. That is true mostly for the Russell Microcap Index, which houses 1,000 of the smallest stocks in the Russell 2000. Its 14-day RSI sitting at 85.4. That is well above the 70 threshold, which marks that overbought level. It has spent 22 of the 27 trading days this year above 70. The Russell 2000 more broadly has spent 13 days over 70, the RSI sitting at 75.3, and the NASDAQ composite is just a touch overbought as well. I would note, though, that the largest cap tech stocks within the NASDAQ 100 haven't spent a single day in overbought territory, so there could be more room to run there, but with momentum this high on the small cap side, that could mean we are primed for a bit of a pullback, John.
All-time highs across the board again, though. Kelly, great to catch up. Kelly Lyons from the market desk on the latest. Your S&P up 0.4, your NASDAQ at 0.5%. BTIG's Julian Emanuel expecting the financials to outperform with the economy heating up. He writes the following: financials will lead the next leg higher and at some point could take on many of the same momentum trading properties as growth stocks. That's when we'd likely be entering a bubble or the speculative mania phase. Could it be 2021? Yes, it can, but not yet. Julian joins us now for more. Julian, great to catch up with you, sir. Good friend of the show, good friend of mine. Great to see you. Julian, I remember a couple of years ago sitting down with Andrea Orchal of UBS. He was running the investment bank at the time, and we were talking about the average age of the trading floor and how many of them, it was 2015, had never seen a rate hike before, and wondering about whether they just had the experience to deal with the market that we would see. And now I wonder almost the reverse, Julian, whether the new cohort, the new generation, accepts all of this for what it is, and the older generation are struggling with it because it's not what it used to look like. What's your take?
Well, there's an element of this sort of confusion, and you've said it yourself a number of times in recent weeks, John. The Fed is a fundamental right now, and everything that we know about the Fed leads us to believe that they are going to remain accommodative. Look, we all know things are cyclical, and at some point, the Fed will likely tighten, but we don't think that time is 2021, and it may not be until mid-2022 or perhaps later. And then when you see a print this morning in inflation that we saw, the market's reaction is really a sigh of relief. Whether we do end up getting base effects in the near term, which we agree will probably be the case, but overall, it just points out the fact that this liquidity spigot continues to flow, and that's a large part of what's pushing share prices higher.
Julian, I spoke to Liz Ann Saunders at Charles Schwab earlier this morning, and I said to her, are you comfortable? How uncomfortable is it just sticking with what's working, just stay with it? And her response was a good one. The problem is what's working changes from week to week. 1 minute it's the small caps, reflation, then it's the big tech players, but ultimately it's an equity market heading north. Julian, what do you want to own? What are you comfortable owning through the rest of this year?
Well, we like small caps and financials especially. Again, to us, this is about the fact that growth is likely to come in stronger than expected. We recently raised our GDP estimate for 2021 to 4.5%. Consensus right now is 4.1. That number's going higher. That likely makes earnings, they don't correlate perfectly, but it likely makes earnings estimates of 20%. There's a potential for upside risks there. And when you think about the backdrop, yes, we are uncomfortable about valuations themselves, but you don't see the potential as yet for an economic slowdown, which tends to be the things, along with the removal of liquidity, that slow markets or end bull markets.
Is there a U.S. bias here, Julian?
No, actually, we think that along the lines of broadening into small caps, broadening into commodities, alternative assets, we like the rest of the world. We think that this is a time very much like the period 2003 to 06, where long end yields rise gently, where synchronized growth kicks in. We're likely to grow the world at well over 5% this year for the first time this entire century. Those are very supportive backdrops for outperformance in the international area.
That word synchronized, though, Julian, grates me a little bit because I'm not seeing a synchronized rollout of the vaccine, and I'm wondering how I can get that synchronized growth if I don't see a synchronized rollout of the vaccine. How's that achievable?
Well, it's again, when you say synchronized, it's not sort of, everywhere at the same rate. Clearly, there's greater success rolling the vaccine out in countries like the UK, in Israel. The United States is starting to do better. But when you think about it in aggregate, the narrative is we are going to get through this pandemic sometime in the second half of this year. And if you think about it as well, John, we've never experienced in our adult lifetimes a situation where the economy might actually move because of pent-up demand on the services side. We know that from the manufacturing side, but the services side, and that's the type of thing that we think could really continue this synchronized move.
Final couple of questions. Just a quick one. When did you publish that Bitcoin piece? Was that several months ago, 3 months ago, Julian?
We launched on Bitcoin at the end of November.
That's right.
When Bitcoin was trading about 18,000, and people raised their eyebrows at our year-end 2021 $50,000 price forecast for Bitcoin. And frankly, when you're thinking about a 70% volatility asset like Bitcoin, the swings are enormous in either direction. So those same people that were skeptical back in November think perhaps we're not being aggressive enough with our $50,000 year-end number. The truth likely lies somewhere in the middle.
There was this brash, arrogant British guy, I think, that read the note and was having a conversation with you, Julian, before we went on air and laughed at it. And here we are at about 45,000 after kissing 48K earlier in the week. Julian, before I let you go, I apologize for laughing at the time because so far so good. How do you even come up with a forecast, Julian?
So basically what it was is this historical precedent, John, for when obvious bubbles get exceeded. And clearly Bitcoin was a retail-driven speculative mania bubble at the end of 2017. But what we've seen is that once that bubble gets taken out, and the best example is the NASDAQ, it took 14 years for that to happen in the NASDAQ. It only took 3 in Bitcoin. But then you've seen these incredibly, meteoric gains in the NASDAQ once the bubble was taken out. And so from our point of view, everything in Bitcoin time is speeded up. We thought gains of 125 to 150% were possible in a year. And, lo and behold, that seems to be where we're at.
The institutional buying has been impressive. Julian, we'll catch up soon. Good to see you, buddy. Julian Emmanuel there of BTIG. Let's get back to that market desk. All-time highs in this equity market. Here's Abby.
Lots of bullish action indeed, John, and we'll be checking in on that fully in a moment. First, though, let's take a look at some earnings movers, and a bit of a mixed bag here, actually, because we have the shares of Cisco, the networking company, trading lower this after they put up a quarter where they beat, but CEO Chuck Robbins is saying that the pandemic is still hurting their business. In fact, that enterprise revenue down 9% year over year, so that stock is down. Akamai, another networking company, is also lower. Their outlook is disappointed. To the upside, though, take a look at Lyft, popping 9%, narrower loss than expected, and they're promising to be profitable this year. So despite the fact that demand is down, they are really improving profits per rider. And then Twitter, take a look at that. My gosh, up more than 14%, the best day in more than a year, an 8th record high in a row. They beat relative to sales, growing 28%. Users disappointed, and that's expected to be the case later this year as the tough pandemic comps kick in. But investors looking right past that right now. So Twitter really helping out the FANG complex part of the markets. As for the reflation trade, banks are higher, even though yields are down. So investors want back in on this part of the market. The banks were down a little bit yesterday, but popping back nicely, as is the case for energy. And oil's just about flat. So it's really interesting, John, that we have the energy names and the banks, even though the underlying assets or the correlating assets aren't really quite moving in the right direction, stocks are going up.
Those equity sectors have just been unreal the last few months. Abby, thank you. Coming up, the effort to speed up vaccination starting to take shape in the United States. That conversation just around the corner. Up next with Morgan Stanley's Brian Weinstein. From New York, this is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
This is under the radar.
This equity market's looking good.
You heard it first here on Surveillance.
The conversations you need to hear.
Always going to be fascinating here, particularly the view forward.
The business team you love to watch.
John, I would wrap into your lousy data check.
Have I got a deal with you for the rest of this year?
This is what I do to keep you two apart.
Live from 6 to 9 a.m. starting February 16th on Bloomberg Television.
It's rate of vaccination versus rate of infection. Vaccinate, vaccinate, vaccinate. Yes, the vaccine is a light at the end of the tunnel. There is no doubt about that. But we have to create that light. We have to make it happen. It's not going to be a situation where the economy will just come back. We have to make it come back.
New York Governor Andrew Cuomo stressing the importance of getting vaccinated. This with the US ramping up efforts to reach herd immunity by year-end and averaging 1.5 million doses per day over the past week. For more on the numbers, here's Kaylee.
Well, John, it's not just here in the U.S. that the vaccination campaign is ramping up. That is true globally as well. So far, 73 countries have started to administer the vaccine, and 138 million doses have been given. The latest inoculation rate was about 4.85 million per day, though the average since the campaign began remains around that 3 million daily rate mark. As you said, here in the U.S., things are picking up as well, a rate of about 1.5 million inoculations per day. But at that rate, it'll take about 9 months to get 75% of the population vaccinated with a 2-dose vaccine. Of course, the hope is that J&J shot, which only requires 1 dose, will get emergency use authorization within the next several weeks. That could help speed up the process and really help the U.S. catch up to other countries that are getting the vaccine out faster. Israel, of course, is leading the world, but the Seychelles, the UAE, and the UK are all near the top as well. And speaking of the UK, its program is relying heavily on the Pfizer-BioNTech vaccine, which requires 2 doses. And the news today is that early findings from the UK's program have given us some of the first real-world data on that, showing the first dose gives about 2/3 protection. The rate is about 65% in younger adults and 64% for those over 80. That's all according to a person familiar with the matter. The official data should be released within the next couple days, but that protection rate does rise to between 79 and 84% with 2 doses. It's noteworthy those efficacy rates are lower than those found in Pfizer's own clinical trials, but still strong protection, and protection is key when it comes to ending the pandemic, John.
Kelly Lyons, thank you. Let's just sit on that just for a moment. The data coming out of the UK, this is really important. So in the United States, we've got about 10% of the population who has had at least 1 shot. 3%, a little more than 3%, fully vaccinated. Compare that to the UK, where fewer than 1% have been fully vaccinated, but almost 20% have had the 1 dose. Now, some people might argue the UK rolled the dice on this a little bit, but looking at the efficacy rates of having 1 dose, as Kelly points out, maybe that might be the optimal way of rolling this out. I wonder how we recalibrate these regimes just a little bit in the months to come. Now, why does this matter to markets? Have a look at what's happened to the bond market in the UK since the start of this year. The yield on a 10-year gilt, the yield on a 10-year government bond in the UK has almost doubled. Now, granted, it's still around 50 basis points, but it's almost doubled off the back, largely off the back of this vaccination effort that has taken place in the UK. And you just wonder what that could mean for bond markets worldwide if we really start to optimize and recalibrate the vaccine rollout in major markets still to come. Let's bring in Brian Weinstein of Morgan Stanley Investment Management, the head of global fixed income. Brian, let's start there. yields, treasury yields, gilt yields. What are you learning about how we're rolling out this vaccine and what it means for the bond market?
Well, I mean, you said it. It means a lot, right? I mean, the market is looking at stimulus plus vaccine and saying that yields are too low. And granted, as you said, yields have gone up a little bit, and then doubled is a funny thing to think about in such a low yield environment. Yep. But there's room to go. It's actually, I think, surprising to many people that 10-year treasuries are still hanging out about 1.15%, where they were just a few weeks ago, when we have more stimulus coming and the vaccine news does continue to get better. So upside to rates continues, I think, across the globe.
Just a belief, Brian, that if they go too high, the Fed steps back in. I mean, how high can they go before the Fed thinks about stepping in to put the lid on?
Yeah, we would say that the stronger growth is, the reason, if the reason for yields going up is really good, that the Fed can let it go a little bit, but the market knows, right? The market knows the Fed is out there. So even if they don't come straight away, somewhere around 1.5%, we think we'll see buyers trying to front run them. It doesn't mean yields can't overshoot, but we do think much above 1.5%, and the Fed will start to at least jawbone, if not directly, try to cap interest rates once they get up there. But remember, if we get 10% growth in the second quarter, depending on the stimulus, yields should be moving higher, so the Fed is not as concerned as they would be in a slower growth environment.
You touched on something important, Brian. We can get higher rates and keep loose financial conditions. Brian, do you have that conversation with clients at the moment? Are they tying one with the other a little bit too closely?
Maybe. I mean, clients have been afraid of duration for way too long, right? It's been our friend, not our enemy, and so this year it's been a little bit of a negative. But listen, clients understand, but they also are looking for things that don't have as much duration. So what are the hot markets right now? Bank loans, right? Floating rate product, emerging markets. So the market is clearly moving away from generic things with duration, and we think somewhat correctly. And some similar trends that you're seeing in the equity markets, right? It's called the small cap portion of the fixed income markets. The harder to access things are doing better.
Looking at credit right now, given the average duration of high yield, given that that's increased, Brian, do you think the rate sensitivity there has increased as well? And my basic question, catching up with Morgan Stanley recently, how do I earn that credit risk without taking on too much interest rate risk at the same time?
It keeps getting harder. As you say, coupons fall and durations go up, so there is definitely more duration in high yield than there used to be. So again, the things that are generic, the things that are in the index are pretty fully valued, but you can still find opportunities in high yield. And as I said, the floating rate loan sector, the emerging market sector, where there are plenty of high yielding things on a relative basis that have less duration.
I started it by basically asking how high rates can go before the Fed steps in. How high do you think rates can go before we start seeing treasuries compete for capital with investment grade? Those flows that have come in from abroad into investment grade, into high yield.
You know, I still think a decent amount away, right? At 1.5%, you'll have some buyers, but I think you still have to get them closer to 2% to really put a lot of pressure on risk markets or credit markets. 1.5% with a 10% potential GDP growth print coming doesn't seem like enough to get people to take their foot off the gas.
Record low junk bond yields. Spreads still aren't tight though. We've been tighter. Brian, great to catch up. We'll talk more soon. Brian Weinstein there of Morgan Stanley. Thank you, sir. Equities up 1/3% on the NASDAQ, up by 0.5%. All-time highs across the board once again. Your sector price action. Here's Abby.
Pretty remarkable with these all-time highs, this run of record highs. So let's take a look at the sectors, and not surprisingly, it is risk on. More so from the perspective that most sectors are trading higher as opposed to the actual composition. Encouraging to the reflation bulls is the fact that energy is up top, up more than 1%. Yesterday, that was the big laggard, but we also have lots of the other energy reflation sectors higher. But keeping it super simple, take a look at this board, John, because you and I have been talking about this reflation trade and its resurgence over the last 2 weeks. Here it is, energy up about 9%, up really 10%, and the KBW Bank Index up 11% in 2 weeks alone. This is the engine of the reflation rally, and it seems to not be stopping, John.
Abby, thank you. Those two sectors, flying. Coming up next, the market-moving events you need to be watching. That'll be next in our trading diary as we count you down to Chairman Powell with the Economic Club in New York just a little bit later this afternoon. From New York, record high equity market, this is Bloomberg.
have any interest if President Biden invited you just to come and take a tour of the White House just to see what it looks like?
If he wants to talk about how to empower people, boy, I would be there in a nanosecond.
$39.31.50 is your new all-time intraday record high. We're just off that level now at 39.24.79. We're up about 13 points though, up a third of 1%. All-time highs across the board once again. This market is roaring since late October. Tom Keane asked the question a little bit earlier, is this the Biden rally? I think it's more the vaccine rally and throw in some fiscal stimulus. That's where the hope is for this year, that things reopen because of the vaccination programs. That's your equity market. Here's your trading diary. What you need to be watching this week. Wholesale inventories coming out at the top of the hour. The White House press secretary holding its daily news conference at 12:30 Eastern. The focus turning to Fed Chair Jay Powell at 2 p.m. speaking with the Economic Club in New York. Full coverage right here on Bloomberg. Another round of claims tomorrow morning. And finally, we get the University of Michigan Consumer Sentiment Survey closing out the week on Friday. From New York City this morning, good morning. For our audience worldwide, all-time highs on the S&P 500 in this equity market stateside. This was the countdown to the open. Continue the conversation with me on Twitter at FerroTV. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first. It's about being the best.
While everyone is zigging, we're zagging.
Well, hi, everyone, and welcome. I'm Jason Kelly, Chief Correspondent for Bloomberg Quick Take in New York. On behalf of Bloomberg, welcome to this installment of Invest Talks, conversation with Mark Carney. Before we get started with that conversation, got a few housekeeping items for you. If you experience any issues with audio or video quality during our broadcast, try to refresh your browser. It's always the easiest thing to do. And if that doesn't work, you can go to the support tab in the event chat box, where one of our engineers will be able to help you out. And please engage with us on social media using the hashtag BloombergInvest and the handles at Bloomberg Live, at Quick Take, and of course, at Jason Kelly News. With that, let me introduce the current vice chair at Brookfield Asset Management, former governor of the Bank of England, special envoy to the United Nations, Mark Carney. Mark, it's really, really good to see you. I'm sitting in a room in New York where I would love to be with you and actually having this conversation, but this is the world we're living in.
It is the world we're living in, and this is the next best thing, Jason. Thanks for having me on.
Well, it's great to see you. And, it's interesting. You and I caught up toward the end of last year when you got this interesting new job. Now you're here to tell us a little bit more about it. It's a big new job. It's a bold new initiative. Tell us what you're up to.
Companies and assets that aren't aligned to Paris, that can decarbonize, and putting them on that path, catalyzing that decarbonization, and in the process, making industry-leading financial returns. So it's exciting, and it's about the mainstreaming of this necessary transition to net zero.
And it's about putting actual capital to work. So tell me about this fund, because you've put some meat on the bone, as it were, about how this is going to look, how it's going to be deployed. Help me understand how that works and sort of the scope and scale of what you're after.
Yeah, well, a couple of those S words are pretty important. So let's start with scope. It's a global focus. It is scale. This is going to be substantially larger than any impact fund to date. It is going to have a singular focus. As you know, there's a lot of good in the impact space, a lot of innovation that's been there, but in most cases, impact funds have multi-purposes. They're doing a variety of good things and achieving various objectives. We've got one objective, which is to put assets and companies on a path to net zero, to be part of the climate transition, in fact, to accelerate the climate transition. And so with the global scope, with the operating expertise and the reach of Brookfield, we're going to go out and do that and look to deliver those returns. So it's a double bottom line. And I guess the key thing and why we wanted to have it as an impact fund is so that we have the same discipline in achieving that environmental objective, reducing the amount of carbon and greenhouse gases that these companies and assets are emitting, making them part of the solution to climate change, not part of the problem. Have that same focus and commitment and clarity, transparency, as we do to the financial returns that we deliver.
Well, and I want to talk about sort of some of these intersections, because you've lived at a number of them over the course of your career and currently do as well. But I want to spend another minute, if we can, on Brookfield, because there is this question, when someone like you, and we talked about this back last year, when someone like you, quote unquote, leaves a post like you left at the Bank of England, there's all sorts of speculation. Where is he going to go? What's he going to do? And you sort of vote with your feet in many ways. Help me understand the Brookfield story here and why that was appealing.
Yeah, well, as I said a moment ago, Jason, I wanted to put words into action. I believe that this is it's climate change is the biggest risk to the world. But when you turn it around, if you're part of the solution, it makes it the biggest commercial opportunity in the world. In effect, we're going to rewire, so to speak, the entire global economy consistent with net zero. And I wanted to be at a place that could play a leading role, in fact, in many respects, a defining role in that. Now, it happens to be the case that I have known Bruce Flatt, CEO of Brookfield, and many of the senior partners of Brookfield for longer than I'd care to admit, but I will admit to more than a quarter century. I've seen what they have done with the firm, transforming it from into one of the world's leading alternative asset managers, shifting from black to, through the spectrum, the underlying assets towards green, not all the way to green, but towards green. And in the process, developing this enormous expertise, not just in renewables, but really in decarbonization, understanding energy systems, understanding business transformation. I mean, this Brookfield is an entity that operates, doesn't own, it does own, but it also operates 20 gigawatts of renewable power across hydro, wind, solar, across 4 continents, and then has the equivalent, in fact, more than the equivalent of in their development pipeline. So track record, expertise, the people, and that ability to operate at scale, at global scope, and to focus on transformation, that all lined up for me. I guess the last thing is just an enthusiasm within the organization to accelerate what needs to be done.
Well, and it's interesting you mentioned enthusiasm, because as I was getting ready for this, Mark, I consulted, people around me and around this industry about you, was asking questions about you. And it's interesting, you are framed as someone said to me, someone who has had more than any other person a singular impact on bringing this issue of the climate crisis to the financial markets. And I guess I do wonder, now that I've got you in the hot seat, why? Why did you take this on? What sort of generated that enthusiasm for you?
Yeah, it's an interesting question. I mean, it's kind of you to say that. Lots of others have played these roles, and we all need to play this role. To some extent, there was, I'm not sure I can point to a specific epiphany, but a gradual realization after I got to the Bank of England. I shifted from thinking that others were going, I always knew this was a major issue, but you sort of think, well, that's an issue for others. Others are going to take care of it. Climate policy, the responsibility of governments or innovators to come up with the technologies. And then realizing that it just wasn't moving fast enough, and looking forward, as was my then responsibility as governor of the Bank of England, looking forward and saying, wait a minute, there's massive financial risk on the horizon. And it's going to end up being closer than we think in terms of not just the physical manifestations of climate change, which quite frankly were easy to see. The Bank of England, as you know, and many don't, oversees the world's 4th largest insurance industry. So we had direct sight on these physical risks. But really what we're seeing is the prospect of enormous stranded assets, potentially, if we transition, if we succeed. Success is failure for some companies in this world on climate change. Enormous stranded assets if we succeed. But wait a minute, if we don't, then the world's heading to 3 or 4 degrees. And the financial sector was just not oriented. So that's really was the crystallization for me. There's a limit, obviously, and rightly so, what you can do as a central banker for that. A lot of the focus then was on disclosure and gaming out these risks for banks and insurers and others. But I, took the view once I was going to move to the private sector when my time was up at the Bank of England. Wait a minute, I want to work to help catalyze this. And I have long felt that if we are going to address this issue, it requires the mainstreaming of climate change and obviously the leadership of the private sector. And now it's very clear this is what society wants. It's beginning to mainstream. And the last point I'll make, not the last point of this interview, but the last point of this answer, is that there's an opportunity with this fund for us to help define what good is, what real transition is, a rigor around actually that decarbonization, a rigor around not just starting at the end state or, with green, but taking assets that are brown or beige or even olive and shifting them to green over the life of the fund.
I mean, it's interesting. We did a couple polls ahead of this conversation, and one of them was around investing sort of around the issue of climate change, and this notion of investing in climate change is smart money. Hard agree, got 66%, not convinced, still getting 22%. But I do wonder, that 66%, I'm not sure we would have gotten that 66 2, 5, 10 years ago. It feels like there has been something of a shift and something of an acceleration even in the past year or two.
I without question, at least from my perspective, there's been an enormous acceleration. This has moved from, as an issue, if I put it, let's be safe and let's go back 10 years. It was more a corporate social responsibility issue, a CSR issue. Now it's a C-suite issue. It's an absolutely strategic issue for virtually every company. There's some who are already robust to the transition, but virtually everyone else is going to have to make changes or is in the process of realizing the scope of changes they need to make. And that means it's a determinant of value. It's not just a determinant of risk, but it's a determinant of real value creation, which is, obviously I'm in the hard agree camp. And, there's a variety of ways to look at this, and this really does span the whole investing spectrum. So about 70%, just under 3/4 of global emissions, you can ultimately trace back to the energy sector. Okay, so it's not just power generation, but it's energy for transportation, energy for buildings, and energy for industrial processes. Much of that is ultimately going to be that stripping out those emissions is going to involve electrification and obviously turning electricity green, And so there's an enormous opportunity there, measured, 3.5 trillion of investment needed over the course of the next 3 decades per annum, 3.5 per annum, so 100 trillion probably in total. So huge opportunity in and around that. And most of that is either commercial or just coming into being commercial. So huge capital opportunity to catalyze that, and that plays to all of Brookfield's strengths. Then there are those emerging technologies that are on the cusp, and really over the life of the strategy we're talking about will come into economics. And think hydrogen and the associated systems around there, direct air capture, carbon capture, other aspects. And then there's the more, the essential breakthrough technologies, to use Bill Gates's term, breakthrough energy technologies that need to happen for us ultimately to get to net zero, which is more VC or growth equity. So it does cut across the whole range, last point, but also because of the scale of the change, as I said earlier, you're rewiring the economy. So it's not just about those power assets. It's about the energy services. It's about how you organize data centers. It's about how you organize district HVAC for buildings. It's whether our homes or neighborhoods become load bearing, or how we manage load within that. Huge necessary steps that need to be taken. And with all of them, great value creation if you're in that hard agree camp and you're looking for it.
And so, and we're going to spend a little bit more time talking about the commercial side, but before we get to that, we have to take a beat, I think, on the political side, because it feels like 2020 was also a year where the political winds shifted maybe in a positive way, and one would argue, sitting in the United States as I am, they have shifted dramatically from a political perspective here in America with a new administration coming in. What did you see that was the most important in terms of the political and governmental policy leadership happening that made you more, if not optimistic, maybe less pessimistic? I don't know how you would characterize it.
Yeah, no, I would say more optimistic without question. But one comment I make, and been in and around policymaking for a couple of decades, and very often, I mean, politics follows the people, and I think this is a classic case. You had a increasing hardening of view amongst people of all generations, but very importantly, the younger generations, but really of all generations, that we've got to deal with this. This is the situation is getting too severe. The object in the mirror is closer than we think, and we've got to tackle climate change. And that ended up, so that was there roughly this time last year, just before we moved into full pandemic. And it was reinforced by the pandemic, without question, reinforced the lessons of the importance of resilience. You can't self-isolate from climate change, the importance of listening to science, and the importance of both solidarity and sustainability. And a recognition, I think, is in parallel that the market is needed to solve these issues. But the great thing is that once society decides what it wants, and very importantly, and this is a point that Secretary Yellen and I made in a paper late last year, which is if policy is relatively predictable, path or price of carbon or clear regulations on things like internal combustion engines or hydrogen and others, then the genius of the market is to pull forward the adjustment and smooth that adjustment. Because the market knows where. And I think that's part of the reason is that we're in a position now where there's very high degree of confidence, certainly about where people want to go. We want to be sustainable. We need to get to net zero. and more confidence that regulation eventually is going to fill in consistent with that. We have some tangible examples, and therefore the market moves. Now, can I make an adjacent point to this, which I think is quite important in terms of what it means for the financial sector? Because what we've been talking about thus far, rightly so, is really focusing in on what companies are going to do, company focus on net zero and the adjustments accordingly. Well, that's also being played back to financial institutions as well. It's like, wait a minute, there's a bit of a chicken and egg. Can you get to net zero as a financial institution if companies aren't moving? But as companies start to move, all of us in the financial sector are being asked, what's your plan? What's your stance on net zero? And, that's something we've looked hard at Brookfield. To say, spend a moment on that, which is Brookfield's in a position today where we are net zero today. Brookfield is net zero, and that's not net zero just in our operations, the buildings we have and if we ever take flights again, when we take flights again, and the hotels and things like that, and the paper, et cetera, but across the 575 billion asset portfolio. And the reason we're net zero is we have this enormous renewables business that we've built up, and all the avoided emissions that come with that. Now, two things to add to that, though. Well, first, just because we're net zero doesn't mean we're everything's green. We have assets that span the spectrum, and we have a commitment that we will manage those assets and work to decarbonize those assets over time, very transparently, and provide the information that the market needs in order to judge that. So again, it's climate change, so we all have to work to take carbon out. But the other element of the strategy is very much what we were talking about earlier. Okay, we're net zero. We think actually we're net zero on a scope 3 basis, which is remarkable, but we still will move with the other assets. And then we've got this strategy on the transition side to catalyze and accelerate the transition for others. And we think that's the type of commitment that makes sense in this environment, and we expect that many others will come in behind it.
And so, on that exact point, is that same societal pressure? Does that translate to investment firms and their ultimate customers? I mean, do the pension funds, do endowments, do sovereign funds, are they applying more pressure to financial institutions at this point, and how much has that changed?
Yeah, that is shifting. That is definitely part of the shift. So, and I'll give you a couple examples of that. There is a group called the Net Zero Asset Owners Alliance. Exactly the types of institutions you're describing, spread around the world, U.S., Europe, Asia, 5 trillion of assets that they own. They own the assets, and they're committed to net zero, and included in that is a 25% plus decarbonization objective for 2025. And so when you think about these, and these are institutions that own a lot of hard assets, so they can't, and very big portfolios, they can't spin on a dime. So they're expecting management down of those assets. That's the first thing. We're seeing the asset managers move as well, with some prominent examples in recent weeks, but also a group that's formally committed to net zero that totals $9 trillion outside of the announcement of BlackRock that we saw a couple weeks ago. We will see more of those, I'm confident, over the course of this year, and including, I believe, a number of the banks to look towards their so-called finance portfolios and how they will manage them over time. Because in the end, society's lining up with this objective. We've got 130 countries and counting who are committed to net zero. And you're really left with three options as an entity. You're either have a path and a plan for net zero, or you're winding down your business over the course of the next 10, 15 years because you don't think you can get there. And your third option is the least attractive, which is you somehow think you're separate from society and the rules don't apply. And it's a free world. You choose your option, but I think the first is in most cases the most profitable.
Well, it's interesting to think about that, Mark, in some ways, because maybe better than anyone how important messaging is. When you were the governor of Bank of England, you knew that every word was measured, every phrase, every choice that you made how much of this, and maybe this is a little bit of a silly question, but I'm a journalist, you'll have to forgive me. Like how much, I mean, there's a certain elegance in net zero, right? I mean, there's a certain that you can sort of lock onto it in some ways that maybe isn't as easy to do with, well, we need to, keep the warming of the planet within this range of percentage degrees.
Yeah. Jason, you're absolutely right. You're absolutely right. There's a clarity of it. And, the reality is the carbon budgets, that's what goes with net zero, as you know. So we only have a limited amount of additional carbon greenhouse gas that we can put in the atmosphere, or else we'll end up at higher temperatures. But actually, we need whatever temperature we want to stabilize the climate at, we have to get to net zero. It's climate, ultimately climate change and degree of warming is a function of the stock of carbon and other greenhouse gases in the atmosphere. So we eventually have to stop producing them, or else it's just going to keep going up. And so very simple, got to get to net zero. Countries and society have chosen where we want to go, which is something less than 2 degrees, ideally 1.5 degrees, which still will result in quite substantial climate change. And then you work backwards from that, and how do you get there? So you're absolutely right. And that's part of what's changed. The knowledge was there 10 years ago, but the language was in terms of sustainability, huge risks. There was a sort of hair shirt element, if I can say that, to a number of the conversations around climate change and the scale of the risks, and very little about the elements of the opportunity. And that's part of what shifted. Candidly, what's also happened during that period of time is, in full power to the innovators and the engineers and entrepreneurs who have shifted the economics of a number of these technologies. And last point, given people real confidence that, well, 30% plus of the emissions are still quite uneconomic, let's put it that way, to reduce, in some cases markedly so. With the spotlight of the market, the spotlight of entrepreneurs on getting that done, there's confidence that people will do it and will make a lot of money and should make a lot of money in the process.
Well, to that point, I want to bring in one audience question which speaks to that exact issue. This is a question from Marcelo Lando. He says, economic incentives, as you were mentioning, seem critical to achieving the Paris Agreement. We're going to talk a little bit about Paris versus Glasgow and all that good stuff. Other than in the European Union and the UK, it does not seem that there will be a meaningful carbon price that would align incentives. Are there any other ways in which economic incentives might be more clearly aligned with the goals of the Paris Agreement?
Yeah. Well, Marcelo, it's a good question. And I understand the thrust of it. I'd say a couple of things. One is that just like with getting to net zero, there's not one technology or one solution to get to net zero, nor with climate policy is there one perfect climate policy. There isn't a magical carbon price at which everything would reorganize itself in the most efficient way to get there. Carbon price is important, and if you can put it in, it is important. And I would add to that list, you have examples, for example, in Canada, where the legislative price is going to 170 Canadian in 2030, which is a big number and will encourage big changes as a consequence. But what the other policies that can supplement are policies such as, for example, the internal combustion vehicle moratorium I mentioned, that being in place 2030, well, that tells me as a vehicle, if I were a vehicle manufacturer, I've got 1.5 model cycles before that. Okay, I'm going to make the kind of dramatic decisions that a GM has just done. It's got an important European business, but it's got a global business, but it sees where the world is going. It's been invested in technologies, it's making a judgment there. It tells me if I want to invest in EV charging, that actually there's going to be a return to that in the relatively, so that sort of regulatory fiat, those types of decisions. Very importantly for technologies, for example, around hydrogen for transportation. That'll be my last example, but I think it's a good one. Regulations around fuel blends in the future, so certain fuel blends for maritime transport, for example. What that does is it gives you greater demand certainty for those who are producing essential technology, mechanical technologies such as electrolyzers for hydrogen. and actually starts to shift the economics of that and certainly the investment in that, as well as it says to somebody who's looking at, for example, energy infrastructure, well, the value of energy pipe and distribution facilities is potentially has this big upside option value that could well be realized on hydrogen, repurposing of that, and you have to do some investment for that, but it shows you that. So that type of regulation, which gives greater demand certainty in the future, is incredibly valuable to drive the type of change today that starts to shift the economics and makes it just easier to roll it out at that point. Right.
So let me ask you, before we get too far away from Paris, I mean, obviously that was a massive agreement, widely hailed. So many people came together. You know, you were obviously, right in the midst of that in a very important way. Glasgow, we're looking ahead to this year. What's the legacy of Paris? What's the expectation for Glasgow?
Yeah, I think I'm going to not do Paris justice. It was a landmark agreement, and full credit to the French and Secretary Kerry and others who were instrumental in achieving it. But if I were to say two things, first, they changed the architecture in this approach of voluntary commitments, so-called nationally determined country carbon plans. First point. So that made it easier to, and there was a sort of ramping effect to increase ambition, but it didn't have this sort of, it didn't have the old architecture of Kyoto, which was a supposedly binding treaty, which didn't turn out to be binding. So that was an innovation. The second thing, I think it was incredibly valuable that they set the objective, the sub 2 degree objective, and then were objective, in terms of adding up all the country plans and saying, well, wait a minute, that doesn't add up to the objective. It adds up to 2.8 degrees on our best estimate. And that sort of transparency is quite important because it does a couple of things. One, it reinforced this carbon budget and net zero point dynamically. It showed that we all needed to do more, even if we lived up to what we said we were going to do, countries have said we're going to do. And I think the thing that shifts with, we hope, one of the things that shifts with Glasgow is Paris started the initiative on subnational governments and the private sector. And not because I'm on this network, but I mean, Mike Bloomberg played an incredibly important role, particularly in the first one, the subnational governments with cities and the cities initiatives. Now it's the coming of age of those initiatives with Glasgow. It's global net zero, everybody in, expectation to go back to what we've been talking about for companies and financial institutions is, what's your plan? What's your objective? Not just 2050, what's your near-term objective and how are you going to start getting there? Are you in or out? And what we're seeing, to the credit of major companies around the world, major financial institutions, is more and more saying they're in, which gets this reinforcing process in place.
And so, when you think about this sort of intersection of policy and business and investment, I'll say it out. I'll say it out loud. When Bruce Flatt, brings you aboard, I am sure part of what he's thinking about is, you can call Secretary Yellen, you can call any number of central bankers, any number of high-level government officials. You have a rapport with them, and you also understand their jobs. So how does that play out? And as you look at what is in front of policymakers at this point, what advice do you give them?
Well, it's interesting. I think my main value add at Brookfield is really about this transition and how it cascades from the financial, what role do we play as Brookfield in delivering this transition, and what are the expectations of Brookfield's investors, its partners, such as those major asset owners, principally those major assets, what are their expectations? What do they need to deliver? What do their citizens ultimately deliver? And how do we get there using our expertise? So it's actually more, it's really that as opposed to looking on the policy side.
Interesting.
Now, that said, it's lonely being a policymaker. I'm certainly lonely at the Bank of England. And you do reach out to people from time to time and get perspective on things. I think my perspectives are more sought on areas that actually aren't directly relevant for Brookfield. I mean, we all care about financial stability and we care about monetary policy and fiscal policy, but it's not, Brookfield isn't a macro investor in that regard. And so that's that, to be honest, more of my discussions are in and around that. And then obviously I'm very active with a number of others in putting together in a very open and transparent way this architecture for Glasgow, because the private sector, ministers, regulators, governments are trying to figure out, okay, if we're trying to orient the financial system so that it doesn't matter whether it's Brookfield or it's an individual investor, it's a bank, it doesn't matter what the region they're in, that they have the information and the ways of expressing a view on climate change, how it affects a given asset, a given investment, a given trade or loan, then we've succeeded. Then we have truly mainstreamed it. So it's a lot of the UN work has been to, again, as you said earlier, we have a shared objective around net zero. The way we're saying it for the UN or for Glasgow is, okay, in the private sector, what do we need in order to make these judgments around climate change? Whether something's on the right or wrong side of climate history, whether there's value there, is value creating or value destroying in the transition. What kind of disclosure do we need? What are the technologies we need in terms of stress testing, climate VARs, other attributes? How should we talk to our investors and the public about how well we're positioned? Is it more than net zero plans? Is it specific carbon reduction objectives? Is it implied temperature warming of our portfolio, which is an emerging financial technology that I think is still a few years away from being mainstream for across portfolios, but will likely become mainstream because it's intuitive in the end. It's intuitive in terms of the position, and then also markets, what markets are missing, whether it's blended finance into emerging and developing economies or voluntary carbon offset markets, what needs to be put in place. And that's I know it's a long answer to your policy question, but that's really where that's the intersection right now that I'm operating on in terms of policy.
I do wonder on that point around policy too, that you also understand clearly, having sat in a very important seat, how you have to manage any number of crises, some anticipated, some anticipated. You mentioned that this time last year, there was some measure of agreement around the climate crisis, and then a global pandemic, comes in and, as you say, underscores some of the elements of climate, but it also is distracting to some extent. So how do you, again, given your experience, suggest that we as business people, but also as policymakers, sort of do the things all together?
That's a great question. And it's easy. It's a great question. It's easier to answer when you're not in the seat, having to do all the things together. But let me give a little gratuitous advice to those in the policymaking seats. And with stuff they know. I think the first thing is some of the best times to prepare for a crisis. It's better to prepare for a crisis. Now, the crisis you prepare for is not the crisis that's going to end up happening. I mean, there's the famous Eisenhower line about plans are useless, but planning is essential, and that's absolutely right. So we had spent a great deal of time in the UK planning for a no-deal Brexit. What would happen if we had an overnight no-deal Brexit, and what could happen to the financial sector, and what protections do we need to put in place? And so we had put in place a number of those protections, which happened to mean that when you had this unforeseen crisis, the COVID shock, the buffers, the resilience, the ability to continue to transact and actually to be part of the solution of the UK financial system was enormous, and it paid dividends. So the first thing is prepare in advance, and then in the crisis, obviously you've got to execute, but it's better to have options. The second is that it's really important that coming out of a crisis, that an economy has direction, and that people have confidence in the rebuild and the regeneration of the economy. So it's not just about redistribution post the crisis, but it's about regeneration. And so pointing the direction, particularly in this case, we're fortunate. I mean, it's absolutely necessary, but we're also fortunate, and we have this opportunity to build towards sustainability which is hugely capital intensive at a time we need a lot of investment. Now with the technologies, it's much more job heavy than traditional so-called bricks and mortar infrastructure. It wasn't always the case, is the case now. And so it's actually what we need as we get over, we're all going to have this initial pop in terms of activity once we're let out of our lovely rooms here. Everybody watching, there's going to be that pop in activity, but we need the carry through, and the carry through is going to come from investment for the future economy. So that's an essential component of where we need to go.
Sounds like a variation on the old Rahm Emanuel saw, don't waste a good crisis, right? I mean, it sees the opportunity to some extent.
If I may, it's a variation on that, although it's a bit bigger. And, my colleague, my successor, who was my colleague, Andrew Bailey, said a couple of months ago that, they started planning for Bretton Woods. Bretton Woods was before the end of the Second World War. So they started planning the post-war architecture before the end. And his point was the Bank of England with respect to climate that's why we, the Bank of England, are going to do a climate stress test in the summer of this year. COVID may not be fully over, but we've got a plan for where the system needs to be so that you move out smartly to it. And I think that's a very wise approach. So it's a variation. It's a variation on that. I think it's a bit more in regard to the follow through of the architecture.
And do you sense, I mean, this is going back to something we talked a little bit about earlier, but from a policymaking and from a political perspective, again, and I'm going to play off of the shift here in the United States. I mean, your co-author on a paper around this is now the Secretary of the Treasury. We had the President of the United States, the new President of the United States, say, I'm back in on Paris. How meaningful is that in terms of the stature of the United States, whatever people may think of it? I mean, clearly holds sway in the world. How important is that to the broader movement?
Oh, it's hugely important. There was a lot of momentum in the broader movement towards addressing this issue. And there was huge momentum in the U.S. private sector. A lot of the innovations, a lot of most innovative companies, highest impact companies, U.S. private sector, most innovative financial institutions, U.S. private sector. So the U.S. was playing a big role. U.S. cities were playing a big role as well. But without question, having the U.S. government, the full force of the U.S. government behind this, they'll bring new ideas, better ideas, energy, the impact.
Okay, ladies and gentlemen, I'm going to sell short Canadian dollar. So if you're looking to sell short, here's your chance. 126.895. Price I'm looking to sell. 126.895. Okay, and that's it. The field order. So you still have chance to place an order, even a bit higher. So if you want to sell short Canadian dollar, please do.
And those are three global giants that are there and are focused, and actually, again, in many respects, will bring are already bringing some of the key technologies. Brookfield's one of the largest private purchasers of solar, and have unique relationships in China for solar, which we then redeploy because that technology is so good, and we can help deliver the climate solutions we need. So it's encouraging the breadth of commitment, I guess I would say.
And so you did a nice job describing, after I clumsily did it, the value that you bring to Brookfield. I would imagine, too, even though it's over Zoom and not sort of wandering down the hall, at a time of, shall we say, turmoil in the global markets, questions about inflation, questions about stimulus. I mean, if I were Bruce Flatt, I'd be Zooming you and saying, all right, what's going on in the world? I mean, what do you make of the markets that we've seen? I would be committing journalistic delinquency if I didn't ask a former central banker what he made of the world right now.
Well, let's start with the macro, and I'll try and stick as close to that as possible. We're in a situation where there's an enormous, financial sector, the core of the financial sector is in good shape. Balance sheets are in good shape. There's a tremendous amount of stimulus that is being provided. Financial conditions are very loose, shall we say, very easy. There's huge fiscal stimulus in place and more to come. And then there's this commitment of the major central banks, more explicit in one case, but softer in others, but still there, to really hold back until it's clear that inflation is sustainably at or if not above targets, and it's certainly above target in the case of the U.S. So all of that's lining up. The market is bringing that forward. I think where there is and that's all given the circumstance we are in, and given the importance of taking a risk management approach, falling back into recession after what we've been through would be exceptionally difficult. Making sure the economy has traction as we come out is paramount. So its policy is poised in the right direction. Look, there are risks, though, to financial stability. There are certainly pockets of excess, and authorities need to be vigilant to those. And investors, individuals need to be vigilant to them as well, because excesses eventually are purged, and you're in better stead in the end if you're aligned to the broader structural trends, including the one we've been focused on today.
And as we wrap up, I always like to make sure that an author gets a chance to talk about his upcoming book. You've got a book that is very relevant, I believe, to this entire conversation, because it speaks a lot about, and obviously keep me honest here, about it is called Values, and it is about both value and values, which do seem to be coming together. And we've talked a lot about the nexus of different things and intersections here. It feels like it's an appropriate intersection in many ways when we're talking about this current crisis of climate.
Yeah, it's good of you to bring it up. I mean, one of the things I did with my lockdown and my 6 months of so-called gardening leave from the Bank of England was to write the book and really to take a step back. I kind of entered as a central banker in crisis at the start of the financial crisis. I exited as a central banker in crisis at the start of the COVID crisis. I'd like to say that, those were received crises. Neither was my fault, but, I'm not sure the correlation is a little unhealthy. On reflection, there were elements of this relationship between value, how things are valued in markets and in society, and the values of society. And we don't have time to go through all of the elements of it, but certainly an excess focus on markets and market valuations and almost market fundamentalism was part of the cause of the financial crisis. I think what we get with COVID is some revealed values of society. I mean, people have cared about their neighbors, and they've done things in the interests of others, people they don't meet, even if they themselves are relatively low personal risk. And so great sacrifice, lots of volunteering, lots of others, a sense of solidarity, community responsibility. And also what we see from that, and this is where we go to climate, is that if you shift for the big issues, whether it's health, COVID, or in the case of climate sustainability, if you shift from trading off, or viewing everything as a trade-off of economy versus sustainability, and you shift that to a hierarchy where you have, we're going to get to sustainability, and it's going to therefore be valuable to be part of the solution. Hey, you take an existential risk, which unfortunately that is what climate change is, and you turn it into arguably the biggest commercial opportunity of our time, which is why we're so focused on being part of it.
So you're having fun?
I am.
This new job?
I am having fun. And you've mentioned Bruce a couple of times, and yes, he's on the phone a lot, but that's good. He's on. I don't know how he does all the calls he does in a day, but that's part of what you got to do to manage these bigger tectonic shifts and manage the day to day. Look, I've been very fortunate, Jason, in my career, in that I've had a series of responsibilities where I've had multiple responsibilities, working across monetary policy, the macro down to the micro on bank regulation, working on climate and others, and being in these roles where I still can do that is a privilege. And final point, in the end, I'm in a role. I like being in roles where you can be measured, and we're going to be measured on are we getting the returns to our investors? And are we accomplishing the impact? Are we catalyzing the decarbonization that the world needs alongside?
Well, it's been a real treat to spend some time with you today. Looking forward to the other side of all of this when we're traveling responsibly, but, seeing and interacting with each other. Best of luck to you, Mark. Thank you so much.
My pleasure, Jason. First trip is to come to see you.
All right. I'll hold you to that. Well, thank you all so much for joining us. And special thanks, of course, to Mark for making some time. We have a whole host of events coming up in the near future. So please be sure to follow us at Bloomberg Live on Twitter and on LinkedIn for updates. Please also be sure to follow me and the Quick Take team at Quick Take at Bloomberg.com and at Jason Kelly News. If you haven't already, please consider subscribing at Bloomberg.com/.
It changed the debate on the Iraq war, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft of the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
Debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for fifth generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
People think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for, it's always some
who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends. But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
From that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it is widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia a regional power. Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. elections.
Yes.
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world. Yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food.
You need to place stop on profit for Canadian dollar at 126.875. Okay. Stop on profit place. So whatever happened, you will not lose your money. Okay, guys. Speak to you later.
In 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统建设，这方面确实比你高。但是玩信息玩软的，中国人的脑袋绝不比你们长。我们在座的所有人的脑袋绝不比你们长。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was very strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma is an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it's served him well.
Okay, guys, move your stop on profit lower, so you will get, because it's which is sold short position, it means lower, it means more profit, to 126.845. Okay, this way you will get more profit if it will change direction.
Peter Thiel is a walking contradiction. He got his bachelor's in Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different...
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, ValueAg, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech support.
Okay, guys, well done. As you can see, position closed at 126.845. Even charts sometimes they won't. It's difficult to trade with candlestick charts because, as you can see, here is the gap. Yeah, it goes up. Brokers managed to sell at the price 126.845. So all what I can say, all candle charts, candlestick patterns, they kind of different to different companies because they buy data from different sources. So anyway, well done, guys. All of you who followed my trades, you made a profit. Let's look for another pair, so we'll make more profit today, okay? Speak to you later.
Describe his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
Two 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases. the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states, such as California, are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. origins of the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch. Some people come with an Adobe Illustrator file. And we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it, and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. bring it over to the aging table, where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
It's a bit like an addiction. You've got to make something. You have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. defend cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured at Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice. You've got to be able to judge material temperatures. You've got to just look at it and you just get a feel for it. It's a stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to the teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives. So we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom. So as soon as I had one, I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something that just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours, start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven, get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Ma Baoli, better known as Gang La, is one of the 4 grand marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences' virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，布鲁蒂能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同志互联网公司。
is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of like predominantly Asian artists, you know, really like making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but like for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. Like, to be honest, I would even go to the bathroom here. I would like take pisses here, you know what I mean? Like, it was, it's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy. And like just the shit that he was saying, like the memes he was making. But I didn't know that he rapped or anything like that. I really didn't. And he came up with Dat Stick like 2 weeks later.
12 in the morning, pop shells for a living and baby gon' smell blood trail every minute road.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it. But the one thing that I noticed is the song was hard as hell. Just like everything about it, man. Just like, it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets like super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. I did the sound check.
How was it?
It was tight.
So, Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier. You know, it's just more entertaining. We just edit it as tight as possible, put it up, and
it really worked.
12 in the morning, pop shit. Living there.
Yo, this nigga got a pouch on and a Reebok pouch. This is the hardest nigga of all time.
You said when you come for a chigga like me, that was dope.
Like, it's just lit, and I think people will take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, just like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chigga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it. Like, who cares? We were like, okay, let's just go crazy at the drop. So that video goes up. I go to sleep, and the next morning, everyone's doing it. Like, next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and, what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for, an independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this.
It's just Taco Bell. What could possibly go wrong?
To creating something like tonight, Rich Chigga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was here at 1.
Yeah,
I was the third person online.
So why'd you get here so early?
Because I want to see Rich Chigga. I want to touch him.
What do you guys think of Joji?
He's That's my dad, son.
You guys copped the new EP or like?
Yeah. I woke up at 6 in the morning just to copy that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But Idiot Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh, shit!
So keep an eye out for Idiot's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store with customers, touch and feel products? And we created a concept called the connected rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. How about there?
First time we came out with B, Jade said, "It feels like I've been released from prison."
Do you want these, Mrs.?
Definitely.
Definitely. Right.
And she could say hello to everybody, people she hadn't seen for months.
It's Jade.
Oh.
So you can talk to Jade through this. Hi, Katie. She's there.
Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look.
Hiya. When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. a condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time.
Yeah, my love.
A lot of the time, with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand.
Are you ready?
Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in a house with just her carers. It's quite a small world, that.
Right, so there's one of them. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do.
Was that? Good.
It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably. And so far it's interesting. Still a few little things that we need to work out, but for the most part I think it's going fairly well, and it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well and I was really tired afterwards and ended up having loads of seizures, whereas today I've been able to do all of the work. I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify root 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I end up letting people down quite often. B gives me hope, yeah. She's just always there. And if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny, but it confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I can stretch it. I can throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Mayron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So, and why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came for Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうと、どの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator, Hiroyuki Ito, and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとは、キャラクターとしてすごく、YouTube とかで検索すると、たくさんの初音ミクが出てくるんですけども、元々の、初音ミクのその原点は歌声を合成する、ソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていうその、存在自体がそのボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでに、プロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいやってきて、ライブも数十本、数百本やったの。そういうことが演奏によって起こせるためのそういう器みたいな感じになってます。初音ミクらしさって僕はあんまりない。初音ミクって何だってあり。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいそのテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
ミクって魂がないので、だからみんな魂を作り上げるために存在する。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer. But humans, they're expensive. For the rest of us, this $60 gadget is all you need.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing